In this lesson, we're going to focus on the execution of the complete breakout strategy, of the CBO strategy. So in the previous lesson, we focused on the explanation of what the CBO actually is. In this lesson, we'll look at the exact same example, but we'll focus on the execution, right? Where do we enter? Where do we place our stop loss? How do we manage the position? Meaning, where do we target, kind of thing. So that's what we're going to focus on in this lesson. And again, we'll start off with a really quick explanation again of what the CBO is. We'll go through the analysis real quick one more time, and then again we'll focus on the real live execution of the CBO strategy. So let's have a look. So as I mentioned in the previous lesson, the CBO strategy is very simple, right? It is one of our safest strategies that we have simply because it has that complete break of the 4-hour 50 EMA and the 1-hour 50 EMA, meaning that the lower time frames are already in a trend, right? They already began a trend and they had a complete breakout, right? Meaning giving us full confirmation pretty much. So with that said, what are the criteria of the CBO strategy? Number one is that we have some kind of major horizontal resistance, or not really just horizontal, any type of major support and resistance, whether it's horizontal, trend line, 50 EMA, Fibonacci retracement, Fibonacci extension, and so on, right? Criteria one is, do we have support and resistance on a higher time frame that is actually being rejected, and it's major. Criteria number two is, do we actually have that rejection, right? So do we have reversal candlestick formation? Do we have deceleration on that support and resistance level, right? Meaning criteria number two, is that level actually being rejected right now, right? Criteria one, do we have a level? Criteria two, do we have a rejection of that level? Number three is the lower time frames, such as the 4-hour chart. Initial break and retest of the 4-hour 50 EMA, right? That is the major criteria of the CBO strategy, is do we have the initial break and retest of the 4-hour 50 EMA, the initial breakout of the 4-hour 50 EMA. And this is where it differs from the IBO, simply because the IBO, the initial breakout, does not have the break and retest of the 4-hour 50 EMA. The IBO trades directly into the 4-hour 50 EMA, hence why it's a little bit riskier than a CBO, because the CBO has the complete break of the 4-hour 50 and the 1-hour 50. Criteria number four is obviously the 1-hour chart. Is it trending in our favor? And is it retesting that 1-hour 50 EMA, right? The full picture on a lower time frames is the complete breakout is a break and retest of the 4-hour 50 EMA, 1-hour 50 EMA, and 0.32 Fibonacci retracement. Right, that's what really the CBO looks like on a lower time frame. Is the complete breakout and the initial break and retest of the 4-hour 50 EMA, plus the retest of the 1-hour 50 and 0.32 Fibonacci at the exact same time. So with that said, let's have a quick look at the higher time frames again. And I'll walk you really quick through the full analysis, right? So the analysis always starts off kind of on a daily time frame. Is in this case, it seems that we have a level that is being rejected. And if I take you to real time of when this analysis was made, it was right here, right? So at this point in time on the daily time frame, we had this beautiful rejection of that horizontal support and resistance level and a break of this trend line, also referenced as a phase line on a daily time frame. So beautiful rejection, we have deceleration, rejection, and a break, right? So let's confirm, is this level actually strong? Is this a good level? So if we zoom out on these charts, specifically on the daily at this point, we'll notice that 1.25 has had rejections right here. 1, 2, 3. A few major rejections right here during the last recession of 2008, right? And we have more rejections right there in 2006, 2005, and that's kind of it, right? So we have a lot of major rejections, meaning that these levels are hit and they're often the extreme highs or the extreme lows, like in this case. So this is a major level, it's really good. And that's the first thing that we have. The second thing is obviously that deceleration, right? And beautiful candlestick formation. That's actually telling us that that level is being rejected, right? And that's right here. So perfect candlestick formation, everything looks good. and we have this break to the downside. We have momentum, right? So we're accelerating to the downside. We're not accelerating to the upside anymore. this level is now being rejected. So both criteria are met, number 1 and number 2. But on top of that, we can also run more analysis. We can do a full multi-time frame analysis. So what's the monthly chart doing? The monthly chart is in a bullish run here, right? But obviously we're sitting at some resistance. So you could obviously see a pullback here, but nothing major. On a weekly chart, it's the same level, 1.25. The weekly time frame is really strong, it's really clean. And again, same rejections, right? So the weekly chart does go a little bit farther because we have some bearish MACD divergence. We have been trending upwards already for quite some time. So you can see that we have this major, we can consider this a wave 3 run, a wave 4 pullback, a wave 5 run has now concluded at 0.618 Fibonacci extension, which is often the best target for a wave 5 run. And this is exactly what I would consider this to be. Wave 3 run, wave 4 pullback, wave 5 run, rejection of 0.618, which also lined up with that 1.25 level. And then on a weekly time frame, we developed a doji the week before the entry actually happened. So this is a weekly pullback, right? At this point, at least it's a pullback because we don't have any bearish price action yet. It is just a pullback. But this is giving us some bearish momentum to the downside, hence why this trade can be pushed a little bit farther. I'm always hesitant whenever it's a daily pullback, whenever we're trading a pullback in general, of pushing it too far, right? I always want to make sure that we have enough confluence factors to actually push this farther than, you know, a really quick target at the previous 4-hour lows or the previous 4-hour highs, or, you know, the 20 EMA. In this case, any pullback with higher time frame confirmation can be pushed to 0.382 Fibonacci retracement, right? Such as 0.382 here on the weekly chart, or 0.382 on the daily time frame, which would also line up with the daily 50 EMA. Simply because we have this weekly confluence, it can be pushed farther to 0.382. But we always need to remember is that it is a pullback play. We still don't have any bearish price action to push it any farther. It is still a pullback. So we have to be a little bit more aggressive on our management. We have to keep an eye out on the daily 20 EMA, any other levels that are in between, right? We also need to keep an eye out at the previous 4-hour lows, because that is often the best target for a CBO. So that's what we have on the higher time frames. That is why the importance of doing full multi-time frame analysis, right? We can also obviously just look at the daily chart, but it's good to look at the monthly chart to see if there's anything there, or the weekly chart to see if there's anything there, and so on, right? We want to build as much confluence in our favor, right? And sometimes there's nothing on a monthly, sometimes there's nothing on a weekly, sometimes we only have the daily chart, and that's cool. That means that it's simply going to be a really quick in and out position. But in this case, it's a pullback play, right? So that's kind of how this analysis is going to play out. It's simply a pullback play. So we're looking to take quick profit, but we can push it a little bit farther because of the weekly pullback that's happening as well. So now, next criteria is obviously the initial break of the 4-hour 50 EMA. And when it happens live, this is kind of what it looks like. Let me jump back in time here. Right here, this is the initial break of the 4-hour 50 EMA. And at the same time, on a 1-hour time frame, right? If we look at the 1-hour chart, this is again what it would look like when you're typically making your watch list, when you're doing this analysis for the first time, right? It typically looks something like this. We still don't have a pullback, right? And we'll be waiting for that pullback to happen. So whenever we come across these setups, whenever we're making a watch list, this is typically what it looks like. This is how a CBO starts off. It's literally this break of the 4-hour 50 EMA. The 1-hour chart is often already in a trend, like in this case, right? But in this case, we also had this beautiful break of this trend line on the 1-hour time frame, right? We can see that on the 1-hour chart, the 1-hour 50 EMA has not really been acting as the best support and resistance level, even though we did have rejections off of it, right? But one thing that was better than the 1-hour 50 EMA here was this trend line. It had multiple rejections, and we finally broke it here. So we got a lower low. We developed this head and shoulder pattern, left shoulder, neckline ahead, neckline, right shoulder, lower high, some consolidation, and then a break, right? So we are in a bearish trend, and now we're looking for a pullback to 1 hour 50 EMA. Check it out. See where the cursor is. 1 hour 50 EMA, 1 hour 0.32 Fibonacci retracement, and the 4 hour 50 EMA. Right? This is where we're looking for that entry. We're looking for the entry around that 4 hour 50, around the 1 hour 50, and around 0.32 Fibonacci. Right? So that's where we're looking to enter this position. Now, from an entry point of view, obviously we can start off by either going with an entry order. It would look something like that. You know, stop loss on CBOs will always be around 0.618 Fibonacci, slightly above or on it or slightly below it. But that's where we always look to place our stop loss, is at 0.618 Fib, right? So this is where we're looking to enter, at 0.618 Fibonacci. Or sorry, 0.382, yeah. Oh, so we enter at 0.382, my bad. We enter at 0.382 and we place our stop loss at 0.618 Fib every single time. That is the safest stop loss for a CBO. We often don't have to push it further than that to 0.75 like we do with an IBO, simply because in this case we have extra protection, which is that 4 hour 50 EMA. With an IBO, we do not have that 4 hour 50 EMA as protection. So in this case, 0.618 is sufficient of a stop loss placement because we have that protection of the 4 hour 50 EMA. In this case, the targets, right? Targets can go two different ways. Initial target, like I said, the safest target often for a CBO will be the recent lows, the low before the pullback, right? So you see the 1 hour chart, eventually here, the pullback is going to begin. There we go, the pullback is beginning right now on the 1 hour time frame. So often the best target, the easiest target to hit on a CBO, right, is the previous intraday lows. In this case, it's the lows, sometimes it's going to be the highs, but it's the previous low before the pullback happens. That will often be the easiest target. And whenever it's a pullback play on a daily chart, right, whenever you're trading that pullback, which this is a pullback, majority of the times, the safest target will be these recent lows, quick in and out position. That is when we don't have anything on higher time frames, nothing on a monthly, nothing on a weekly. It's just simply a daily pullback. In this case, we have a little bit more confluence on that higher time frames on the weekly chart and so on. So we can push a little bit farther, right? Such as the next potential target would be the 20 EMA on a daily chart. That is 1.23, right? Slightly above it. So 1.23 would now be 2.5% profit. That is if you place an entry order, right? We're looking at 2.5% profit now. The next target, so this would be a pretty easy target to hit, but it's all obviously the next level, right? The next target after that would be a little bit harder to hit, but because we have higher time frame confluence from a weekly chart, we can potentially push to this target, which is roughly 2.17, 0.32 Fibonacci retracement, right? So if you take it down to 2.17, we're looking at 5% profit. Yeah, 2.17 is now 5% profit with this entry order, right? So in this case, you could very well place an entry order. It's a pretty nice trade. Good higher time frames, pretty clean intraday time frames. Nothing really wrong with this setup. You can definitely place an entry order and see what happens. So let's see how this plays out. Let's fast forward on a 1 hour chart. Boom, right? So now we hit that 1 hour 50 EMA. 4 hour time frame. There we go. And here we go. Now we hit that 4 hour 50. At this time, we now rejected the 4 hour 50 and the 1 hour 50 EMA. And now the 5-minute chart. Let's fast forward there. So the pullback is beginning. It's a little bit slower on this 5-minute time frame, so gonna have to wait a little bit. And we're almost there. Boom. 0.32 Fibonacci was hit, right? So whenever we do this, I always draw Fibonacci retracement on the 5-minute chart as well, right? So now we're going from the extreme highs highs on a 4-hour chart, highs on a 1-hour chart to the extreme lows, right? So it's this fib from the extreme highs to the extreme lows, right? This full breakdown. And 0.32 is often, again, a good entry price. So if you're placing an entry order, it will be a 0.32 fib, right, just below it, which lines up with the 1-hour 50 EMA and the 4-hour 50 EMA. Perfect, right? So you always want to have, if you're placing an entry order, you always want to have it at the main levels, 4-hour 50, 1-hour 50, 0.382 fib, right? In this case, stop loss, again, above 0.618 Fibonacci retracement, right? So either on or slightly above 0.618 fib. So at this point, your entry would have been hit if you had an entry order placed. And in this case, it would have been totally fine because it is a pretty clean trade, right? However, if you wanted to wait for a live entry often gives you more confluence, more confirmation, because it gives you that deceleration and the 5-minute break to the downside, right? So it gives you a little bit more confirmation. So let's fast forward on this 5-minute time frame to see what happens, right? And when we actually get that 5-minute break. So if we continue going, I'll narrate in between there. So the reason why this entry order is good is because on good setups like this, where again, we have everything's lining up pretty clean, it's clean price action, clean higher time frames, and so on, it's fine to place entry orders. Specifically, if you're not going to be on the charts, if you're traveling, if you're working, and so on, these types of trades where they're so clean, specifically CBOs, it's often very easy and no big deal if you place an entry order because there's so much confluence, because we have that full breakdown, not much risk, right? So it's okay to place entry orders. It's not, CBO is not, it's not that risky of a setup. But sometimes you want to wait for that live entry. You know, maybe the higher time frames are not that perfect. Maybe you just prefer to wait for live entries because they give you more confirmation, more confluence. They actually tell you that this level is being rejected. Whereas with an entry order, it could very well just continue going up, right? That is the risk. But obviously, the live entry often will happen a little bit lower than the entry order, like in this case. So here, we always, whenever we take a live entry, we pre-plan, right? So we can pre-plan a live entry, meaning that instead of entering at that entry order, you can always kind of wait. With a live entry, you can pre-plan it. So in this case, it will be 65 pip stop loss, and you'll be entering on that 5-minute 50 EMA break, right? So let me delete this. Let me move this forward because that is the actual entry order with the management. So you would enter here as it's breaking that 5-minute 50 EMA. That is where you would take the live entry, and that is where you would take the live entry short, right, on that 5-minute 50 EMA break. Now, I'm gonna let this 5-minute time frame move on its own, right? So I'll just let it play, let it do its thing. At the same time, I'll talk about this 1-hour time frame now. So the 1-hour chart right now has the rejection of that 1-hour 50 EMA, right? And this is pretty much where we would enter this position. This is where that 5-minute 50 EMA break also happens. So at this point, we had a perfect rejection of that 1-hour 50 EMA. And at the same time, there was that perfect rejection of the 4-hour 50. Look at that. At the time of the entry, you had a beautiful high test reversal rejecting that 4-hour 50 EMA. This is exactly what we want to see. We want to see a beautiful rejection of the 4-hour 50 and the 1-hour 50 and 0.382 Fibonacci retracement, just like this. It's literally perfect. So this is what a CBO looks like. And after that, obviously, we fall farther. You know, we continue to fall. It closed as a beautiful high test on a 4-hour time frame, right? And then just continued to drop after that. Actually went into a little bit of consolidation, you know, and then eventually it started to drop. There we go. See, it's looking good. Now this one's decelerating a little bit, right? It's slowing down. And right here, it's starting to decelerate, right? So you can see it's starting to slow down on the 4-hour time frame. And this is pretty much where I took profit. I'll talk about the management in a second. Let me fast forward on the 1-hour time frame. Right, so After the entry, you can see on the 1 hour chart, it fell beautifully to the downside. All those levels were rejected. This is again why the CBO setup is so good, because it has so many confluence factors, right? We're at the beginning of the daily run, majority of the times, right? Or the daily pullback. So we're at the beginning of the daily move. We're also at the beginning of the intraday trend, the lower time frame trend. But it's so good because we have so many confluence levels. Support and resistance on a higher time frame, candlestick formation on a higher time frame, really good support and resistance on a lower time frame, such as the 4-hour 50 EMA, the 1-hour 50 EMA, 0.3 to Fibonacci retracement, right? All those levels are acting as support, which are really good. And we have a full trend change on the lower time frames because we have this full complete break of the 4-hour 50 EMA. Versus the IBO, we're trading into the 4-hour 50 EMA, right? So this is what makes that CBO so good, right? So we're almost at the end here on a 1-hour time frame, and we're stalling at that 1-hour 50. So you can see the 1-hour 50 is acting as a really good support and resistance level. And this is, I actually fast forwarded a little bit too far. There we go. So a short-term management approach will be applied like this, where you're trailing that 1-hour 50 EMA and you're exiting on the break of the 1-hour 50, right? We're going to talk about management later in the lessons. After we finish the strategies, we're going to be digging into the management. But short-term management is you're exiting on the break of the 1-hour 50. In this case, we did not have a break of the 1-hour 50 EMA, so there's no exit there. Short-term aggressive, so a little bit more of an aggressive management style, and that happens whenever you just think a pullback is coming and you don't want to hold a pullback. So since in this case, if you look at the higher time frames, we're playing a pullback on a daily chart, right? So it started to fall. And we're playing this pullback. You can see in this case, it's now on the 20 EMA. It could potentially reject the 20 EMA. Hence why we want to utilize these short-term managements in case we believe that that level, that 20 EMA is being rejected, we can exit for profit, right? But in this case, it continued to fall a little bit farther, right, from the doji. And here is where it actually started to slow down. See this double doji, right? It's still a pullback. We don't have any bearish price action here. It's still a pullback, and we developed this double doji. At the same time, the 1-hour chart started to slow down here, developing a double bottom, right? Extreme lows, bullish MACD, bullish engulfing. This is where I shut down the position. And at that exact same time, the 4-hour chart started to decelerate, gave us a low test, right? And this is short-term aggressive management. At this point, I believe the pullback is coming and I'm taking my profit. A little bit more aggressive. And again, we're going to chat more about that later in the lessons as well. But with that said, let's jump forward on this 5-minute time frame because it's taking forever. And there we go. And now on that 5-minute time frame, simply to finish off the short-term aggressive management approach, you exit as it breaks the 5-minute 50 EMA to the upside, right? So you have some kind of reversal candlestick formation that happens on a 4-hour and the 1-hour, right? That makes you believe that a pullback is coming. In this case, we have this deceleration, low test on a 4-hour chart, double bottom, bullish MACD, bullish engulfing on a 1-hour time frame, followed by a break of the 5-minute 50 EMA. And this is where you exit based on the short-term aggressive management. And then this trade, a CBO like this, ended up for 2.7% profit. Pretty good, pretty clean. So that is the full execution of the CBO setup, right? As you can see, it's pretty straightforward, but there's options to it. We could have taken it as an entry order, right? Because it's a pretty safe setup. A CBO is a pretty safe setup. So an entry order on a CBO, it's okay to do, right? It's not a bad thing, specifically if you really love the trade. In this case, it would have been a little bit more profit because you would have had a better entry price, right? At 0.382, even with the same exit. You would have had a better tighter stop loss, 45 pip stop loss instead of a 60 pip stop loss, right? Better entry, better stop loss, and it would have been 4% instead of 2.79, right? That is the difference. An entry order carries a little bit more risk, right? But it often gives you a much better reward to risk ratio, simply because of the better entry price, tighter stop loss, and so on, right? But again, carries a little bit more risk, but that is a possibility. And again, to summarize, first initial potential target, which is the safest target, would always be the previous lows in this case. the previous 1 hour lows before the pullback. Second target would be 20 EMA, right, on a pullback play. Third target on a pullback play, and the last target on a pullback would be 0.32 Fibonacci, maybe the daily 50 EMA. That is only whenever we have some higher time frame confluence, like in this case, the weekly chart. That is it. So that is it for the CBO strategy, the complete breakout strategy. That is the full execution. There's many ways to execute this setup, whether it's an entry order or a live entry, a few different ways to place your targets as well. But in general, it's a pretty mechanical setup that follows a certain criteria: initial break and retest of the 4-hour 50 EMA, 1-hour 50 EMA, 0.32 Fibonacci retracement. That is what a CBO looks like. It's one of my favorite strategies. I would say it is my favorite strategy. It is also the safest strategy. So I'd highly recommend that you focus a lot on learning these first two strategies. They are the most common. They're also the safest, and they will present you with many great opportunities. So that is it for this lesson. That is it for the complete breakout strategy, and I'll see you in the next one. Take care.